Gold's just been around for thousands of years. And, gold is gold. Gold doesn't really change. What changes is the value of fiat currency. How much, of a currency do you need to buy gold? And when we had a stable monetary system that was, there was no central bank. What we were on, gold was our money. The price was constant. The first Coinage Act in 1789 defined a dollar as a weight of gold. And basically, an ounce of gold was $20. That's what it was. $20, was 1 ounce. And when we created the Federal Reserve in 1913, it was still $20 an ounce. And it stayed 20 until 1933 when Roosevelt devalued. And now you needed $35 to buy an ounce of gold. So the dollar was now worth less gold than it was before Roosevelt devalued. And it stayed $35 an ounce until Richard Nixon was president. And he devalued the dollar a couple of times. And he left it at $42.22 or something like that. And then we said, okay, forget it. We're off. The dollar is no longer defined by gold. The dollar is not worth its weight in gold. It's just worth whatever somebody will pay for it. It's just free floating fiat currency. No longer has any tangible backing to it. And ever since then, you've need more and more dollars to buy an ounce of gold. Now you need $3,300 to buy an ounce of gold. But gold hasn't changed. It's the same ounce of gold. What's changed is the purchasing power of the dollar, fiat Federal Reserve note. And that's going to continue. I mean, we have massive deficits that are only going to get bigger, not smaller. For all the political hype of Doge, the Republican big, beautiful bill takes a debt problem and makes it worse. The deficits that were already big will be bigger as a result of this bill than they would have been had they never passed it.
Why?
Well, because they have tax cuts and spending increases beyond what was already scheduled. And so there's bigger deficits, so there's more money printing, and so dollars are going to lose value, and you're going to need more dollars to buy the ounce of gold. But I'd say that the entire move, probably over the last year and a half, where gold's gone from about 2,000 to 3,300, 50% increase in the price of gold, has happened with very little public interest. The public has not been buying gold. They've been buying Bitcoin instead of gold. The buyers have been mainly central banks, foreign central banks, who I think are a lot more sophisticated than the typical Bitcoin buyer. And I think that they're buying gold because they're selling dollars and they're looking for a diversification from their reserves. And I think they recognize that the dollar's value is going to decline, that its days as the reserve currency are numbered. They're not over yet, but they're coming to an end. And so they're preparing for a world where the dollar is no longer, the center of global monetary system. And so if you're going to replace your dollars, what are you going to replace it with? You buy euros, you're going to buy yen, you're going to buy pounds. I mean, all those currencies have their own issues. I think the most likely alternative for central banks to hold is gold. And so they've been buying, and I think they're going to continue to buy, regardless of price. But at some point, I think the public is going to wake up to what the central banks are doing and join in. And so that's going to send the gold price up even higher, when now you have, private investors, both retail and institutional, competing with central banks to buy a scarce quantity of gold. And eventually, I think a lot of the people at this Bitcoin conference will be trying to buy gold too. And maybe they'll be trying to cash in their Bitcoin to buy gold. But, when a significant number of people want to sell their Bitcoin, the problem is there's nobody to buy it.
Is that why you're here to convert the Bitcoiners into the gold people?
Well, I'm hoping to talk some sense into these people. But the problem is we're in this echo chamber.
Right.
And people are saying, how can all 30,000 of us are right and you're wrong, right? Well, because it's a Bitcoin conference, right? I mean, if it was an idiot conference, right? Yes, all the idiots would be wrong. And if I showed up at an idiot conference, not being an idiot myself, right? So it's not a random sample of people that happen to be at this Bitcoin conference.
Sometimes I feel like I've been saying the same thing for decades because, well, I have. And the irony is, the longer I keep saying it, the more right I turn out to be. But people still look at me like I'm the crazy one. Meanwhile, the folks who completely missed the housing bubble, who told you inflation was transitory, who think the Fed is going to save the day, they're the experts on CNBC. That's the clown world we're living in. So look, let's talk about gold for a second. And I really mean let's talk about money, because gold has been money for thousands of years. What changes is not gold. Gold is exactly the same today as it was in the Roman Empire, or during the Ming Dynasty, or at the founding of America. What changes is the value of the paper currency you need to buy it. And that, my friends, is the entire problem. Back when we actually had a real monetary system, meaning a gold standard, the dollar had a very clear, very honest definition. Under the original Coinage Act of 1792, a dollar was literally defined as a specific weight of gold or silver. So a $20 bill was basically an IOU for an ounce of gold. That's it. No magic. No fancy accounting. Just honest money. You could walk into a bank with your 20 bucks and walk out with a $20 gold piece. Try doing that today. They'll laugh you out the door. And here's the thing most people don't get. When the Federal Reserve was created in 1913, we still had the gold standard. The dollar was still worth exactly the same amount of gold, $20.67 an ounce. The Fed's job, supposedly, was to keep it that way, to maintain the purchasing power of the dollar. How'd they do? About as well as you'd expect a bunch of unelected economists with printing presses to do. By 1933, under FDR, we had a little problem. The government spent way too much money during the Great Depression, and people started to catch on. So they did the logical thing. They started taking their paper dollars to the bank and demanding gold. Well, the government couldn't have that. They didn't have enough gold to cover all those paper claims they'd issued. So what did Roosevelt do? He basically defaulted on the gold obligations. He confiscated private gold, made it illegal for Americans to own it, and then immediately devalued the dollar by raising the official price of gold from $20.67 to $35 an ounce. Think about that. Overnight, the dollar lost 40% of its value versus gold. If you held cash, you were robbed. If you had gold, you were protected. Fast forward to Nixon. By the late 1960s, thanks to the Vietnam War, the Great Society, and all sorts of government boondoggles, America was printing money like crazy. Foreign countries started to get wise. They said, hey, we don't want your paper anymore. Send us the gold. So gold started flowing out of the U.S. Treasury to places like France. Nixon faced a choice. Either stop spending and let the economy crash into a painful deflation, or do the politically easy thing, default again. So in 1971, he slammed the gold window shut, ended Bretton Woods, and said foreign governments would no longer be able to convert their dollars into gold. That was it, the final nail in the coffin. The dollar was officially backed by absolutely nothing. From that point forward, it was all just a giant confidence game. And by the way, when Nixon closed the gold window, the official price of gold was still $35 an ounce. What is it now? $3,300. That's not because gold got more valuable. It's because your dollars became worth less. Literally, it's right there in the purchasing power. Here's something even more insane. From the 1790s until 1933, over 140 years, the dollar lost virtually none of its purchasing power relative to gold. Then the Fed took over. In just the next 90 years, the dollar lost over 99% of its value versus gold. That's the track record. And yet people still call gold a barbarous relic, as if our brilliant PhD economists are doing such a bang-up job maintaining stable money. Now let's bring this up to today. We've got deficits north of $2 trillion annually. That's just the federal government. You've got total U.S. debt north of $34 trillion and climbing. We've got more debt than we can ever repay, so the only way out is to inflate it away. That means printing more dollars. That means your dollars buy less gold, less silver, less everything. And look at what's happening right now in the gold market. Everyone's focused on Bitcoin. Everyone's chasing Nvidia. Meanwhile, the real story is under the surface. The biggest money in the world, I'm talking about central banks, sovereign wealth funds, private billionaires, are hoovering up physical gold. Central banks bought over 1,100 tons of gold last year. That's a record. Why? Because they know the dollar system is on borrowed time. They're diversifying out of dollars and into real money.
Well, the alternative, I guess, was political suicide. I mean, the problem was the government, mainly under, prior to Nixon coming on board, a lot of it was under Lyndon Johnson. But during the 1960s, you had, the war on poverty, Great Society, Vietnam, the moon mission. So we spent a lot of money, and we issued a lot of debt. We didn't have gold about it, and so we came to an inflection point where either we needed to deflate, devalue, or default. And so in order to devalue or deflate rather the bubble, we would have had to have prices coming way down to meet the gold price. Alternatively, we could massively devalue the dollar and make gold. Nixon tried devaluation, but it wasn't enough because he only devalued a little bit. But it would have been very politically embarrassing to substantially devalue the dollar. So they basically chose defaulting on the obligations. Remember, Federal Reserve notes were obligations to pay gold that we did not have, right? Because we created too many notes. It's like if you have a checking account and you write a bunch of checks, but that exceed your balance, right? These checks are going to bounce if any people try to cash them. And we had issued a lot more Federal Reserve notes than we had dollars to back them up because the Federal Reserve notes were IOUs for gold, right? That people were loaning us their gold. And so rather than massive cuts to government spending that would have been required, a deflation of prices coming down, and defaults and bankruptcies, a lot of things would have had to happen. And Nixon took the easy way out. And, we did have a big inflation that followed. Anyway, we had a lot of inflation. That's why we had the price increases in the 1970s, because Nixon, made the choice that he did. And if you remember, or know about the 1970s, the dollar lost about 2/3 of its value versus the Deutschmark, the yen, the Swiss franc, but it lost even more relative to gold. And it went from $35 an ounce to $850. But oil prices went from $3 a barrel to $30 a barrel. It's a tenfold increase. But oil prices didn't really go up. The dollar went down. When we were giving OPEC $3 to buy a barrel of oil, we were giving them $3 that were backed by gold, that were redeemable in gold. But when we were giving them $30, we were just giving them paper. They couldn't get anything. So it was politically expedient for Richard Nixon to take that path.
Sure.
And unfortunately, that path became available to him in the Johnson administration because that's where the president was given the authority to do that under Johnson. And in fact, my father is one of the few people who testified in front of the Senate Banking Committee against that. But, the chairman of the Federal Reserve at the time, the president, secretary of the Treasury, they were all in favor of this. And my father said that if we go off the gold standard, it's going to lead to higher inflation, right? Gold prices are going to go up. And the Federal Reserve chairman and the secretary of Treasury said the opposite. They said that it was the dollar that was propping up gold. And if we went off the gold standard, the gold price would fall. That it was the dollar that was supporting gold and that we would actually have lower inflation going off the gold standard. So, everything that the Federal Reserve chairman and the Treasury Secretary chairman said would happen was wrong. And my dad got everything right.
So yeah, look, this whole illusion is sustained by confidence. That's it. The dollar only has value because people have faith in it. They believe the Fed will keep it relatively stable, that the US government will somehow figure out how to pay its bills. But what happens when that confidence is shattered? That's when you see the real fireworks. Let's be honest, what we're witnessing is just the early innings of a long overdue collapse in fiat confidence. The dollar has been riding high on its status as the reserve currency, and that's allowed the US to run deficits without consequence for decades. We've been exporting inflation to the rest of the world. The problem is the rest of the world is catching on, and they're done with it. Take China. They've been gradually dumping treasuries and buying gold. Same with Russia, same with India. In fact, if you look at central bank gold purchases over the last 2 years, they've been off the charts. We just saw the 7th consecutive month of China adding to its gold reserves. That's not an accident. That's a strategic move. These countries see what's coming, a shift away from the dollar system, and they're preparing for it. They're accumulating real money. Meanwhile, what are American retail investors doing? They're buying meme stocks and hoping to get rich quick off Dogecoin. It's like a modern-day Tulip Mania. Look, the average person on the street can't tell you what inflation actually is. They think prices just magically go up because of greedy corporations or because it's a supply chain issue. They have no concept that inflation is a monetary phenomenon. It's the expansion of the money supply. That's it. And once you expand the money supply enough, the purchasing power of your currency collapses. And here's where it gets really funny, or tragic, depending on your point of view. People say to me, "Peter, Gold's up 50% in the last 18 months. Isn't that a bubble? The bubble is in the fiat currencies that are being printed into oblivion. Gold isn't changing. Gold is the same shiny piece of metal it was 2,000 years ago. What's changing is the dollar. You just need more dollars to buy the same ounce of gold. The illusion is the strength of the dollar, not the price of gold. Think about it. In 1913, when the Federal Reserve was created, you could take a $20 bill and get a 1-ounce gold coin. Now that same ounce of gold is worth over $3,300. That means the dollar has lost over 99% of its purchasing power versus gold. Yet people still call gold a risky investment. It's not. It's a hedge against the incompetence of central bankers and politicians. And let me go back to something you mentioned, because it's important. The public hasn't really participated in this gold move yet. It's been largely driven by central banks, sovereign wealth funds, and a few smart institutional players hedging against what they see coming. Meanwhile, retail investors have been all in on tech stocks, Bitcoin, and whatever the latest speculative craze happens to be. They haven't woken up to gold. Not yet. But they will. At some point, they're going to realize their dollars are melting. And when that happens, they're all going to rush for the exits at once. They'll want gold, silver, real assets. And guess what? There's not enough to go around. Gold is a tiny market compared to global financial assets. Silver is even tinier. When the herd moves, prices will have to go parabolic just to accommodate demand. Let's be clear, the central banks know this. That's why they're front-running the public. You don't see the People's Bank of China stacking Bitcoin. They're stacking gold because they know when the monetary reset comes, when the world tires of being held hostage by the Federal Reserve's printing press, it'll be gold that's at the center of the new system. Look at what BRICS is doing. They're laying the groundwork for trade outside the dollar. Saudi Arabia just joined BRICS. That means the petrodollar is dead man walking. The day Riyadh accepts yuan or rupees or gold for oil instead of dollars is the day the game changes forever. And that day is getting closer. Meanwhile, in America, we're sleepwalking. We just had a so-called fiscally responsible Republican bill that actually increases deficits. The same people who screamed about inflation for the last 2 years just passed a bill that will guarantee even more inflation. Why? Because it has tax cuts and spending increases baked in. That means bigger deficits, more borrowing, and ultimately more printing. And yet they pat themselves on the back and tell voters, look, we fixed the problem. No, you didn't. You made it worse. Now here's the tragedy, or the opportunity if you're prepared. As this monetary experiment unravels, we're going to see the biggest transfer of wealth in human history, from people holding paper to people holding real money, from people who believed the Fed to people who bought gold and silver. And mark my words, when gold is $5,000 or $10,000 an ounce, when silver is $200 an ounce, the mainstream will say, nobody could have seen this coming. Just like they said, nobody saw the housing crisis coming, except of course I did. And I'm telling you right now, the same forces are at work. And look, let's talk about Bitcoin for a minute, because I know half the people watching this either own Bitcoin or are thinking about buying it. Here's my issue. Bitcoin is a speculative digital token. It's not money. It's not a store of value. It has no intrinsic utility. And don't give me this nonsense about digital gold. Gold has been money for 5,000 years. Bitcoin's been around for 15. It might be the pet rock of this cycle. And yes, it might go up some more, especially if people lose even more faith in fiat. But when the real monetary reset happens, the world's central banks are not going to base the new system on a crypto created by an anonymous coder. They're going to use gold, because that's what they've always done. And by the way, you can't trust Bitcoin to be there in a crisis. It depends on electricity, internet connectivity, exchanges not blowing up. It depends on there being a bid. What happens when people want out? Who's the buyer at $60,000 if everybody wants out? With gold, there's always a bid, always. And it doesn't rely on a server farm in Iceland. Let me give you another way to look at it. Gold is the bedrock of the monetary system. Always has been, always will be. Fiat currencies are the speculation. They're the bubble. Bitcoin is a tech startup in comparison. So when the confidence game finally collapses, and it always does, You want to own the asset with 5,000 years of history, not a digital token that's hoping to become money someday. Now, the public isn't there yet. Most people still think the dollar is strong, that the Fed can keep hiking rates forever, that inflation's under control. It's all nonsense. The Fed is trapped. They can't keep rates this high without blowing up the bond market, the banking sector, the government's budget. Meanwhile, inflation isn't going back to 2%. It's structurally embedded now. You think we're going to get all these wages back down? Rents down? Insurance costs down? Not going to happen. We've baked higher prices into the system. That means the purchasing power of your cash is going to keep eroding. And eventually, people will figure it out. By the time they do, gold won't be $3,300. Silver won't be $37. The miners won't be this cheap. It'll all be multiples higher. That's how markets work. They move slowly at first, then all at once. And if you're waiting for the headlines to tell you to buy gold, it'll be too late. By then, the big money will have already positioned. So yeah, I might sound like a broken record. I've been pounding the table on gold for years. But you know what? I'd rather sound repetitive and be right than be the guy telling people to load up on tech stocks or meme coins right before the bottom falls out. Because make no mistake, when this monetary reset comes, and it is coming, the people who were diversified into real assets are going to come out on top. The people all in on fiat and paper promises, they're going to learn a painful lesson. So look, I'm not telling you to sell everything and buy gold coins tomorrow. That's not prudent. You want to have a balanced portfolio, but your foundation should be real money, physical gold, physical silver, not ETFs, not unallocated accounts. Metal you can actually hold. That's your insurance against the stupidity of governments and central banks. And let's be clear, the stupidity isn't going away. We just re-elected the same types of people who got us into this mess. The debt's still exploding, the Fed's still printing, and the public's still clueless. That's a perfect setup for much higher gold and silver prices. So yeah, when people finally figure it out, when they panic into gold, they're going to drive it to levels that seem impossible today. And you'll be glad you listened to some gold bug ranting on YouTube instead of trusting the same economists who didn't see 2008 coming and didn't see inflation coming either. In the end, it's simple. Gold is money. Everything else is credit. And when the credit collapses, when confidence evaporates, gold will still be there, same as it ever was. So be smart. Get ahead of the herd. And when this monetary experiment finally implodes, you'll be one of the few standing there with your wealth intact, while everyone else is left holding worthless paper or a frozen crypto wallet.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.